Unit 1, Basic Real Estate Concepts, Learning Objectives. When you have completed this unit, you will be able to accomplish the following. Distinguish between land, real property, and personal property, and the physical and economic characteristics of real property. Describe the concept of land use and development, including highest and best use and the advantages and disadvantages of real estate investments. Identify the various careers and areas of real estate specializations and the professional organizations that support them. Explain the operation of supply and demand in the real estate market. Key terms: broker, business cycles, chattel, demand, hereditaments, heterogeneity, highest and best use, land, market, non-homogeneity, non-provisional broker, personal property, personality, provisional broker, real estate, real property, situs, supply, tenements. Introduction. It is important that real estate students understand the basic characteristics of real estate, how real estate is used, and the real estate market. This unit presents those fundamental concepts and lays the foundation for the exciting and challenging study of real estate practice. Learning objective. Distinguish between land, real property, and personal property, and the physical and economic characteristics of real property. General characteristics of real estate. There are two major classifications of property, real property and personal property. The distinction between these two types of property is an important one. Real property is defined as the land, everything that is permanently attached to the land, and everything that is appurtenant to the land. Personal property, or personality, is considered to be all property that does not fit the definition of real property. The primary characteristic of personal property is movability. Items of personal property, also referred to as chattels, include such tangibles as furniture, clothing, money, bonds, and bank accounts. In other words, a chattel is an item of movable personal property. General characteristics of real estate. Land, real estate, and real property. The words land, real estate, and real property are often used interchangeably. However, for a full understanding of the nature of real estate and the laws that affect it, brokers need to be aware of subtle yet important differences in meaning. Land. Land is defined as the Earth's surface extending downward to the center of the Earth and upward to infinity, including things permanently attached by nature, such as trees and water. Land includes the minerals and substances below the Earth's surface together with the airspace above the land up to infinity. The surface, subsurface, and airspace can be owned separately as surface rights, subsurface rights, and air rights, and can be severed by separate conveyance. A specific tract of land is commonly referred to as a parcel. Land, real estate, and real property. Real estate. Real estate, or realty, is defined as land at, above, and below the Earth's surface, including all things permanently attached to it, whether natural or artificial. The term real estate is therefore somewhat broader than the term land, and includes not only the physical components of the land provided by nature, but also all human-made permanent improvements on and to the land. Land is referred to as improved when streets, utilities, sewers, and other improvements are brought to the land, making the land suitable for building. Real property. Real property is defined as the land itself, the improvements thereon, and the interests, benefits, and rights inherent in the ownership of real estate. The broader term real property includes the physical surface of the land, what lies below it, what lies above it, and what is permanently attached to it, as well as all the rights of ownership that are usually referred to as the bundle of legal rights, including the right to possession and use, the right to exclude others, the right to profit from the land, and the right to dispose of or encumber the land. Sometimes attorneys use the phrase land, tenements, and hereditaments in real estate documents instruments. This expression describes all the rights capable of being owned and enjoyed. In the context of this expression, land is the soil and everything natural under it and attached to it, and the air above it. Tenements are any structures attached to the land, and hereditaments are any interests in real estate capable of being inherited. In practice, when people talk about buying or selling houses, office buildings, land, and the like, they usually call these things real estate. For all practical purposes, the term is synonymous with real property as defined here. Therefore, in everyday usage, real estate, or realty, includes the legal rights of ownership specified in the definition of real property. General characteristics of real estate. Physical and economic characteristics of real property. 7 characteristics define the nature of real property and affect its use. These characteristics fall into two broad categories: physical characteristics and economic characteristics. Characteristics of real estate. Physical characteristics. Land has three physical characteristics that set it apart from other commodities: immobility, indestructibility, and uniqueness. Immobility. It is true that some of the substances of land are removable, and that topography can be changed, but the geographic location of any given parcel of land can never be changed. Because land is immobile, the rights to use land are more easily regulated than are other forms of property use. Indestructibility. Land is durable and indestructible. The permanence of land, coupled with the long-term nature of the improvements placed on it, has tended to stabilize investments in land. However, while land is indestructible, the improvements on it depreciate and can become obsolete, thereby reducing values, perhaps drastically. Uniqueness. No two parcels of land are ever exactly the same. Although they may share substantial similarity, all parcels differ geographically. The uniqueness of land is also referred to as its non-homogeneity or heterogeneity. In fact, it is the uniqueness of each parcel of land that gives rise to the remedy of specific performance for the breach of a real estate contract. Under the doctrine of specific performance, the party harmed by the breach of a real estate contract can ask a judge to force the breaching party to carry out the terms of the contract rather than ordering the breaching party to pay monetary damages. Because each parcel of land is unique, monetary damages cannot compensate the damaged party for the loss of that particular parcel. Economic characteristics. The following basic economic characteristics of land are the factors that influence its value as an investment: scarcity, location, improvements, and permanence of investment. Scarcity. Although land is not thought of as a rare commodity, its total supply is fixed. Even though a considerable amount of land in the United States is still not used or inhabited, the supply of land in a given location or of a particular quality may be limited, creating increased demand for that specific land. Because no more land can be produced, the increasing use of land has a positive impact on value. American humorist Will Rogers once said, "Buy land. They ain't making no more of the stuff." Location. Area preference, sometimes called location, refers to people's choices and tastes regarding a given area. Location is one of the most important economic characteristics of land. Situs is a related term regarding location that takes into consideration social factors in addition to economic factors. Improvements. Any addition or change to land or a building that affects the property's value is referred to as an improvement. Improvements of a private nature, such as the house, fencing, etc., are referred to as improvements on the land, whereas improvements of a public nature, such as sidewalks, sewer systems, curbing, etc., are referred to as improvements to the land. Additions or alterations to the property that are merely repairs or replacements may not be considered to be improvements. Brokers should be aware that the term improved land has two meanings. If buildings are constructed on the land, the buildings can be considered improvements. If the land has been prepared for development, such as with grading, installation of utilities, etc., the land may be referred to as improved land. Building an improvement on one parcel of land affects the value and utilization of neighboring tracts, and can have a direct bearing on whole communities. For example, improving a parcel by constructing a shopping center or selecting it as the site for a nuclear power plant can directly influence a large area. Such land improvements can influence not only other parcels and other communities favorably or unfavorably, they may affect the use, value, and price of the land. Permanence of investment. Once land is improved, the total capital and labor used to build the improvement represents a large fixed investment. Although even a well-built structure can be torn down to make way for a newer building or another use of the land, improvements to the land such as drainage, electricity, and water and sewer systems remain because they generally cannot be dismantled or removed economically. The owner has no way to transfer the investment to another parcel of land. The return on such investments, therefore, tends to be long-term and relatively stable. This permanence generally makes improved real estate unsuitable for short-term, rapid turnover investing. A disadvantage of owning real estate is that it lacks liquidity. Learning objective. Describe the concept of land use and development, including highest and best use and the advantages and disadvantages of real estate investments. General concepts of land use and investment. The various characteristics of a parcel of real estate affect its desirability for a specific use. For example, contour and elevation of the parcel, and availability of transportation and natural resources, such as water, all affect the use that can be made of a property, and the way in which a property is used has a dramatic impact on the value of that property. General concepts of land use and investment. Highest and best use. The highest and best use is the use that will give the owners the greatest actual return on their investment. Extensive studies are often prepared to determine whether a property is being properly utilized. For example, a highest and best use study may show that a parking lot in a busy downtown area or a farm surrounded by urbanized land is not the current highest and best use of the property. If a property can be put to its highest and best use, its value will be maximized. For example, if the highest and best use of a piece of property is as a high-rise office building rather than as a parking lot, changing its use accordingly will increase its value and also will give the owners the highest return on their investment. Although a property can have only one highest and best use at any given time, the highest and best use can change. Because of changes in socioeconomic conditions, a property's highest and best use may be a retail shopping center today, but a large apartment complex 5 years from now. In practice, visitors to the Raleigh-Durham area may remember the Triangle Motel that sat right in the middle of the Raleigh-Durham airport for more than 30 years. Eventually, the airport authority decided that the highest and best use of the acreage in the center of the terminals would be a multi-story parking deck. The Triangle Motel was demolished in 2000 and replaced with a $40 million terminal area parking garage, adding a total of 2,700 new parking spaces between terminals A and C. General concepts of land use and investment. Land use controls. The potential uses of real property are limited by various land use controls. Property owners cannot simply decide to tear down their single-family home and replace it with a convenience store. Chances are they would be violating a land use law. The regulation of land use is accomplished through both public and private land use controls, discussed in Unit 6. General concepts of land use and investment. Real estate as an investment. Real estate, no matter what its use, is virtually always considered an investment. Customers often expect a real estate broker to act as an investment counselor. Though brokers should possess a basic knowledge of real estate investment, they should always refer a potential real estate investor to a competent accountant, lawyer, or investment specialist who can give expert advice regarding the investor's specific interest or objective. Real estate practitioners can deal with customers on a basic level, and real estate brokers should possess a rudimentary knowledge of real estate investment. Such knowledge begins with a brief examination of the traditional advantages and disadvantages of investing in real estate, as discussed in Unit 13. Advantages of real estate investment. Historically, well-located and fairly priced real estate investments have shown a good rate of return, often higher than the prevailing interest rate charged by mortgage lenders. Theoretically, this means that an investor can use the leverage of borrowed money to finance a real estate purchase and feel relatively sure that, if held long enough, the asset will yield more money than it costs to finance the purchase. It should be remembered that part of the return must make up for the value lost by a depreciating asset, such as a building. Most real estate values tend to keep pace with the rate of inflation. Such an inflation hedge provides the prudent real estate investor with relative assurance that if the purchasing power of the dollar decreases, the value of the investor's assets will increase to offset the inflationary effects. In addition, real estate entrepreneurs may enjoy various tax advantages, which are discussed in more detail in Unit 13. Disadvantages of real estate investment. Unlike stocks and bonds, real estate is not a liquid asset. This means that an investor may not be able to sell real estate quickly without taking a loss. Contrast this with the investor in stocks listed on the New York Stock Exchange who needs only to call a stockbroker to liquidate assets when funds are needed quickly. Even though a real estate investor may raise a limited amount of cash by refinancing the property, that property is usually listed with a real estate broker, and the investor may have to sell at a substantially lower price than full market value to facilitate a quick sale. In addition, it is difficult to invest in real estate without some degree of expert advice. Investment decisions must be based on a careful study of all the facts in a given situation, reinforced by a broad and thorough knowledge of real estate and the manner in which it affects and is affected by the marketplace, the human element. Unsophisticated investors should seek legal and tax counsel before making any real estate investments. Rarely can a real estate investor sit idly by and watch the invested money grow. Management decisions must be made. For example, should the investor manage the property personally, or would it be preferable to hire a professional property manager? How much rent should be charged? How should repairs and tenant grievances be handled? Is sweat equity required to make the asset profitable? Finally, and most important, a high degree of risk often is involved in real estate investment. There is always the possibility that an investor's property will decrease in value during the period it is held, or that it will fail to generate sufficient income to make it profitable. External influences beyond the investor's control may come into play in negative or positive ways, affecting the value of the investment. Learning objective. Identify the various careers and areas of real estate specializations and the professional organizations that support them. The scope of the real estate business. Billions of dollars worth of real estate is sold each year in the United States. Adding to this great volume of sales are rental collections by real estate management firms, appraisals of properties ranging from vacant land to modern office and apartment buildings, and the lending of money through mortgage loans on real estate. Millions of people depend on some aspect of the real estate business for their livelihood. As the technical aspects of real estate activities become more complex, real estate offices require an increasing number of people properly trained to handle such transactions. Many professionals and business organizations, such as lawyers, architects, surveyors, accountants, and tax specialists, banks, trust companies, and abstract and title insurance companies also depend on the real estate specialist. The scope of the real estate business. Real estate, a business of many specializations. Despite the size and complexity of the real estate business, many people think of it as being comprised of only brokers. Actually, today's real estate industry employs millions of knowledgeable individuals who are well trained in specialty areas such as appraisal, property management, financing, development, counseling, and education. Each of these areas is a business unto itself, but every real estate professional must have a basic knowledge of these specializations to be successful. Real estate brokerage. The business of bringing together people interested in completing a real estate transaction is called brokerage. Usually, the broker negotiates the sale, purchase, or rental of property on behalf of others for a fee or commission. The commission, generally a percentage of the amount of the transaction, is usually paid by the seller in a sales transaction or by the owner in a rental transaction. Brokerage is further discussed in Unit 7. North Carolina's real estate license law stipulates that a person must be licensed as a real estate broker if he or she lists or offers to list, sells or offers to sell, buys or offers to buy, auctions or offers to auction, negotiates the purchase, sale, or exchange of, leases or offers to lease, or rents or offers to rent any real estate for others for compensation or the promise of compensation. Real estate sales professionals in North Carolina usually begin their career in apprenticeship roles as provisional brokers. If provisional brokers engage in any of these activities, they must be under the supervision of a real estate broker in charge. Once provisional brokers complete certain education requirements, they are called brokers. Appraisal. The process of estimating the value of a parcel of real estate is appraisal. Although brokers must have some understanding of valuation as part of their training, qualified appraisers are generally employed when property is financed or is sold by court order. The appraiser must have sound judgment, experience, a detailed knowledge of the methods of valuation, and licensure as an appraiser. Appraisal is covered in Unit 17. Property management. Someone who handles the operations of a property for its owner is involved in property management. The property manager may be responsible for soliciting tenants, collecting rents, altering or constructing new space for tenants, ordering repairs, and generally maintaining the property. The manager's basic responsibility is to protect the owner's investment and maximize the owner's return on the investment. Property management is discussed in Unit 12. Financing. The business of providing the funds necessary to complete real estate transactions is called financing. Most transactions are financed by means of a loan secured by a mortgage or deed of trust by which the property is pledged as security for the eventual payment of the loan. This and other methods of real estate financing are examined in Unit 14 and Unit 15. Property development. This specialty includes the work of developers or subdividers who purchase raw land, divide it into lots, build roads, and install sewer systems. Property development also includes the skills of architects and builders who improve the building lots with houses and other buildings and sell the improved real estate, either themselves or through brokerage firms. Property development is discussed in Unit 6. House construction is discussed in Unit 16. Counseling, providing competent independent advice and guidance on a variety of real estate problems, is known as counseling. The counselor attempts to furnish the client with direction in choosing alternative courses of action. Increasing the client's knowledge is every counselor's function in rendering services. Education. Education is the provision of information to both the real estate practitioner and the consumer. Colleges, universities, private schools, and trade organizations conduct courses and seminars on all aspects of the business, from the principles of the per-licensing program to the technical aspects of tax and exchange law. Other areas. Many other specialties and professionals are also part of the real estate business. Practitioners associated with mortgage banking firms and those who negotiate mortgages for banks and savings associations are examples of professionals associated with these other areas of specialty. Members of corporate real estate departments, as well as officials and employees of government agencies such as zoning boards and assessing offices, are further examples. Professional organizations. The real estate business has many trade organizations, the largest being the National Association of Realtors. Organized in 1908, NAR sponsors various affiliated organizations that offer professional designations to brokers and others who complete required courses. NAR, along with the state and local boards, serves the interests of its members by keeping them informed of developments in their fields, publicizing the services of its members, improving standards and practices, and recommending or taking positions on public legislation or regulations affecting the operations of members and member firms. NAR institutes and sample professional designations. Institute. Designation. National Association of Realtors. www.nar.realtor/ Graduate Realtors Institute. Certified International Property Specialist. Accredited Buyer Representative. The Counselors of Real Estate. www.cre.org divided by the Counselors of Real Estate. Commercial Investment Real Estate Institute. www.ccin.com. Certified Commercial Investment Member. Institute of Real Estate Management. www.iren.org. Accredited Management Organization. Accredited Resident Manager. Certified Property Manager. Realtors Land Institute. www.rliland.com. Accredited Land Consultant. Society of Industrial and Office Realtors. www.sior.com. Specialist in Industrial and Office Real Estate. Women's Council of Realtors. www.wcr.org. Leadership Training Graduate. The majority of local real estate associations throughout the United States and Canada are affiliated with NAR. Members of the North Carolina Association of Realtors and affiliated local boards subscribe to the association's strict code of ethics and are entitled to be known as realtors or realtor associates. The term realtors is a registered trademark. North Carolina has approximately 70,000 real estate licenses, of which 43,650 are realtors. Yes, all realtors are brokers, but not all brokers are realtors. Do not confuse NCAR with the North Carolina Real Estate Commission, which is the regulatory licensing agency of the state. Among the many other professional associations is the National Association of Real Estate Brokers, whose members also subscribe to a code of ethics. Members of NAREB are known as realtists. The scope of the real estate business. Uses of real property. Just as there are many areas of specialization within the real estate industry, there are many different types of property in which to specialize. According to its use, real estate can generally be classified into one of the following 5 categories. Residential, all property used for housing, from acreage to small city lots, both single-family and multifamily, in urban, suburban, and rural areas. Commercial, business property, including offices, shopping centers, stores, theaters, hotels, and parking facilities. Industrial, warehouses, factories, land in industrial districts, and power plants. Agricultural, farms, timberland, ranches, and orchards. Special purpose, churches, schools, cemeteries, and government-held lands. The market for each of these types of properties can be further subdivided into the sales market, which involves the transfer of title, and the rental market, which involves the transfer of space on a rental basis. In practice, although in theory a real estate broker or firm can perform all the services listed above, and handle all 5 classes of property. This is rarely done, except in small towns. Most real estate firms tend to specialize to some degree, especially in urban areas. In some cases, a real estate broker may perform only one service for one type of property. Residential property brokers and industrial property managers are 2 examples of such specialization. Learning objective. Explain the operation of supply and demand in the real estate market. The real estate market. In literal terms, a market is a place where goods are bought and sold, where value for those goods is established, and where it is advantageous for buyers and sellers to trade. The function of the market is to facilitate this exchange by providing a setting in which the supply and demand forces of the economy can establish market value. The real estate market is a free market and is local in nature. The real estate market, supply and demand. The economic forces of supply and demand continually interact in the market to establish and maintain price levels. Essentially, when supply increases, prices drop as more producers compete for buyers. When demand increases, prices rise as more buyers compete for the product. Production slows or stops during a period of oversupply. When the market cannot meet the demand, production increases to take advantage of demand. Supply and demand are balanced at what is called the point of equilibrium. Example: here's how one broker describes market forces. In my 17 years in real estate, I've seen supply and demand in action many times. When a car maker relocated its factory to my region a few years back, hundreds of people wanted to buy the few higher bracket houses for sale at the time. Those sellers were able to ask ridiculously high prices for their properties, and 2 houses actually sold for more than the asking prices. On the other hand, when the naval base closed and 2,000 civilian jobs were transferred to other parts of the country, it seemed like every other house in town was for sale. We were practically giving houses away to the few people who were buying. Supply and demand in the real estate market. Characteristics of goods in the marketplace determine how quickly the forces of supply and demand will be able to achieve equilibrium. Such characteristics are the degree of standardization of the product, the mobility and financial stability of the product, and the mobility of the parties. Real estate is not a standardized product. No 2 parcels can ever be exactly alike. Each parcel of real estate is unique because it has its own geographic location. Because real estate is fixed in nature, it cannot be moved from area to area to satisfy the pressures of supply and demand. Property buyers are also generally limited in their mobility. Retirees are a major exception in regard to residences. For these reasons, the real estate business has tended toward local markets, where firms can maintain detailed familiarity with market conditions and available units. The increasing mobility of the population, the growing impact of new technologies in communication and data handling have resulted in the geographic expansion of real estate firms. Where standardization and mobility are relatively great, the forces of supply and demand balance relatively quickly. But because of real estate's characteristics of uniqueness and immobility, the real estate market is generally relatively slow to adjust. To a certain extent, the product can be removed from the market, yet an oversupply of product usually results in a lowering of price levels. Because development and construction of real estate take a considerable period of time from conception to completion, increases in demand also may not be met immediately. Building may occur in uneven spurts of activity owing to such factors. Factors affecting supply. Factors that tend to affect supply in the real estate market include the labor force, construction costs, government controls, and monetary or financial policies. Labor force and construction costs. A shortage of labor in the skilled building trades, an increase in the cost of building materials, or a scarcity of materials tends to decrease the amount of housing built or increase its cost. The impact of the labor force on price levels depends on the extent to which higher costs can be passed on to the buyer or renter in the form of higher purchase prices or rents. Technological advances that result in lower priced materials and more efficient means of construction may tend to counteract some price increases. Government controls and financial policies. The government's monetary policy can have a substantial impact on the real estate market. The Federal Reserve Board establishes a discount rate of interest for the money it lends to commercial banks. That discount rate has direct impact on the interest rates the banks charge to borrowers, which in turn plays a significant part in people's ability to buy homes. The Federal Housing Administration, and the Government National Mortgage Association Ginnie Mae can also affect the amount of money available to lenders for mortgage loans. In 2008, America's greatest challenge became the uncertainty of the financial institutions. Until then, the Federal National Mortgage Association and the Federal Home Loan Mortgage Corporation Freddie Mac, which were private companies under congressional charter, had been the driving force of monies to provide loans to low, moderate, and middle-income families. Failed judgments in buying mortgages on the secondary market and irregular accounting practices contributed to the unpredictable and chaotic real estate market in 2009. This resulted in the federal government taking over Freddie Mac and Fannie Mae by placing them into conservatorship. In 2010, Congress passed and President Obama signed the Dodd-Frank Wall Street Reform and Consumer Protection Act. The act created the Consumer Financial Protection Bureau. The CFPB consolidates most federal consumer financial protection authority in one place. The Consumer Bureau is focused on one goal: watching out for American consumers in the market for consumer financial products and services. Most recently, beginning in 2015, the CFPB has implemented new rules which affect settlement practices across the United States. Virtually any government action has some effect on the real estate market. For instance, federal environmental regulations may increase or decrease the supply and value of land in a local market. Real estate taxation is one of the primary sources of revenue for local governments. Policies on taxation of real estate can have either positive or negative effects. High taxes may deter investors. On the other hand, tax incentives can attract new businesses and industries. Of course, along with these enterprises come increased employment and expanded residential real estate markets. At the local level, real estate taxation is one of the primary sources of revenue for government. Policies on taxation of real estate can have either positive or negative effects. Tax incentives have been one way for communities to attract new businesses and industries to their areas. And, of course, along with these enterprises come increased employment and expanded residential real estate markets. Local governments also can affect market operations in the development and construction of real estate by applying land use controls. Building codes and zoning ordinances are used by communities to control the use of land. Real estate values and markets are thereby stabilized. Community amenities, for example, churches, schools, and parks, and efficient government policies are influential factors affecting the real estate market. Local governments can negatively influence development by imposing excessive fees or overly restrictive zoning and building codes. Factors affecting demand. Factors that tend to affect demand in the real estate market include population, demographics, and employment and wage levels. Population. Because shelter is a basic human need, the general need for housing grows as the population grows. Even though the total population of the country may continue to increase, growth is not uniform. Some areas grow faster than others, and some do not grow at all. Some places have become modern-day ghost towns, where the exhaustion of natural resources or the termination of an industrial operation has resulted in a mass exodus. Demographics. Not only population but the makeup of that population, demographics, affects demand. Family size and the ratio of adults to children, the number of people moving into assisted care facilities and retirement communities, the effect of doubling up, where two or more families use one housing unit, and the changing number of single-parent households all contribute to the amount and type of housing needed. Also pertinent are the number of young people who would prefer to rent or own their own residences, but for economic reasons, have roommates or remain in their parents' homes. Employment and wage levels. Home ownership and rental decisions are closely related to the ability to pay. Employment opportunities and wage levels in a small community can be affected drastically by decisions made by major employers in the area. Individuals involved in the real estate market in such communities must keep well informed about the business plans of local employers. To estimate how changes in wage levels will affect people's decisions concerning real estate, it is also important to look for trends in how individual income is likely to be used. General trends in the economy will influence an individual's spending decisions. Business cycles. The upward and downward fluctuations in business activity are called business cycles. Although business cycles often seem to recur within a certain number of years, they are actually caused primarily by forces such as population growth, taxes, interest rates, wars, and oil embargoes. A business cycle can generally be characterized by 4 stages: expansion, recession, depression, and revival. The movements of a cycle are usually gradual and indistinct. The real estate cycle. As stated earlier, the real estate market is slow in adjusting to variations in supply and demand. Because one factor of a real estate cycle is building activity. The time lag between the demand for units and the completion of those units causes real estate cycles to peak after the rest of the economy does and take longer to recover from depressed periods than do other economic sectors. The local character of the real estate market creates many local conditions that may not correspond to the general movement of a real estate cycle. Governmental anti-cyclical efforts. Ever since the Great Depression of the 1930s, the federal government has attempted to establish fiscal and monetary policies to prevent extreme fluctuations in the business cycle. By increasing government spending during times of recession and taking money out of circulation through taxation and control of lending institutions during times of inflation and expansion, the government attempts to promote steady, gradual economic growth. Key point review. Land is the Earth's surface, extends downward to the center of the Earth with subsurface rights, and stretches upward to infinity with air rights. Real estate includes land at, above, and below the Earth's surface, and all things permanently attached to the land, both natural and man-made. Real property includes interests, benefits, and rights that are automatically included in the ownership of land and real estate. The characteristics of real estate include the following: physical, immobility, indestructibility, uniqueness, economic, scarcity, location, improvements, permanence of investment. Real estate brokerage is the business of bringing people together in a real estate transaction conducted by a broker who is a person or company licensed to list, lease, buy, exchange, auction, negotiate, or sell real property for others for compensation and who may be the agent of buyer, seller, or both, or a provisional broker who conducts brokerage activities but must operate under the supervision of a broker in charge until he or she completes certain education requirements. Appraisal is the process of estimating a property's value that is based on established methods and an appraiser's professional judgment, and is regulated by the following. Licensing or certification is required for many federally related transactions. North Carolina requires separate licensing or certification for appraisals. Property management is conducted by a property manager, a person or company hired to maintain and manage property on behalf of its owner, whose scope of work depends on a management agreement, and basic responsibility is to protect owner's investment while maximizing the owner's financial return. Financing is the business of providing the funds that make real estate transactions possible through mortgage or deed of trust loans secured by the property, and commercial banks, savings associations, mortgage bankers, and mortgage brokerage companies. Property development involves splitting a single property into smaller parcels and constructing improvements on the land. Counseling involves independent advice based on sound professional judgment. Education provides real estate information to practitioners and consumers alike. Types of real property include the following: residential, single-family and multifamily; commercial, office space, shopping centers, stores, theaters, hotels, parking facilities; industrial, warehouses, factories, land in industrial districts, power plants; agricultural, farms, timberland, ranches, orchards; special purpose, schools, places of worship, cemeteries, government-held property. The real estate market reflects principles of supply and demand, influenced by the uniqueness and immobility of parcels of real estate so that when the supply increases and demand remains stable, prices go down, and when demand increases and supply remains stable, prices go up. The factors affecting the supply of real estate include the following: labor force availability, construction and material costs, government controls, environmental restrictions, land use, building codes, zoning, government financial policies that impact interest rates, and the money supply. The factors affecting the demand for real estate include the following: population, some areas grow faster than others, some decline. Demographics, family size, lifestyles, niche marketing. Employment and wage levels influence housing affordability.